Hey, what's up, guys? It's Cat from Tavera Trading. Today, gonna go over a quick $119 profit day that I had during Qatar, trading my time overseas. The market actually opens there at 5:30 compared to 9:30 here, which is crazy. 5:30 p.m., not 9:30 a.m. Here's my. We're gonna look at my Discord server real quick, where I have the the numbers here. $119 profit day. And here are my orders, which we're about to go over, and the times that they were placed. Keep in mind they're all in PMs because I said I was in Qatar, UAE time, as opposed to New York Standard. And here's also my statements. And all right, let's go. How did we even get here to begin with? And I'm going to clear this, which we're going to go over in another class. But today we're going to focus on these three things, right? We'll say these two things for now. So, first things first, how did I get the stock? The stock was a leading gapper. What does that mean? It means that these are the gappers, these are the stocks ranked through this column, which show the percentage that they've each increased from the night before to this morning. This stock has increased over 191% this morning, for example, right? If we take a look at it, RXDX, let's see what we got. RXDX went from $40 all the way to 133. So it gapped up 191%, which is incredible. It's a really good move. So that's essentially how I got tops. So on the day of this trading, I was looking at my gapper scanner and I saw tops. I looked at tops and I was like, oh, okay, it's gapping up really nice. It's below $10. And then I looked it up here, and I saw that it had 2 million float. What does this mean? What does float mean? The float, as listed here, means the number of shares available to the public. In other words, the supply, right? The supply of the stock. You know, economics, we have the supply and the demand, right? The supply of the stock is how much is out there for you to buy. That is the float. Supplies under 20 million are incredibly low, and that's my criteria for looking for these stocks that have these moves, right? So the float was 2 million. Back tops and see what I do exactly. Where was I? Where was I? I was over here. Okay. So I sat on my computer. This is what I was seeing. So this is what I did. I saw at the high of the day, I would draw pre-market high, but we already crossed that level, right? So there's no need for that. So our first steps first, we draw a high of the day or pre-market, whichever one is higher. Of day, right? The high of the day. Second, now that it came all the way up, sold off onto this indicator. This white line is called the volume weighted average price. It's called the volume weighted average price. And it's essentially an indicator of showing whether, well, if the stock is above it, the buyers are in control. If it's below it, the sellers are in control, right? So they usually sell off to this area, right, which is where the buyers and sellers fight for control of the stock. Now this period is called the consolidation, when they sell off and now there's a consolidation. They calm down. Everything's calm now, right? The volume is calm, the stock is calm. Two things I do. I draw my high of day, and second, I draw the high of the consolidation period. If I had to draw a consolidation period, I'd say the high of here and the low of here. This is the channel, in other words. This is, if I show you right here, this is like think of it like a channel, like a tunnel, right? Right now, what's going to end up happening is that now that the price is here, it's going to be bouncing between these two levels. And if it breaks this level, then it's going to flop. But if it breaks this level, then we get a retest of our high of day. How did I draw this line? Well, I look for the next high below the high of day. Not this. This is weird. This looks weird. It's too choppy. However, this, we could see clear direction change at 5. So psychologically, it's a good level. It's a key level. So I draw the high of my consolidation pattern right here, my high of day. And if you want, you could draw the low of the consolidation, which is essentially where you could buy the dip at. As you see here, people clearly bought the dip. Or keep in mind that once it crosses this line and starts selling off, the stock's done for the day. There's no chance. Okay. Now after I did that, my idea was to buy at low risk point. And that was right here at the break of this little area. the break of this little 1 minute candlestick. And what did I do? I waited and at 9:59, which is said, I bought in right here. I bought in 9:59 once it consolidated above the volume weight average price, which is a really good risk position, risk to reward ratio position. Why? Because as soon as it crosses this white line, boom, I'm out. $4 loss. But I'm aiming to get all the way up here and even further. So that's what we call a good risk to reward position. And as you see, now we broke this line, right? So my first entry was here. My second entry was going to be the break of this little resistance area, right? I added here. My third add was here at 5, the break of this, the high of the consolidation for a potential retest of 5.25. And we kept getting those levels. As you see, I keep adding into my position. Now, what does this do? Most people, they wait for the price to get to 5.2 and then they buy. They buy, oh, once we're close to the breakout, but that's a mistake. That's a mistake because as you see here, you see how fast is the 1 minute candlestick. The price rejected in seconds because so many people have so many sell orders here. And yes, we can get an incredible breakthrough up the upside, but if you buy right at the resistance level, chances are you're gonna get fucked, right? So now that I have my averages and I bought here, if this does happen, I'm protected. I could get out break even or even with a small loss, I'm safe because I played it smart. Because I've been asked these good risk positions, right? So, all right, so on the 30s, okay. Now with the break, we look at, what do we look at? Profit targets. That is right, my fellas. We're going to look at some profit targets. So this was, I remember looking to see if I could find any key levels. The closest one is 6, solid, right? Solid, we see that 6 is also a little kind of key of direction change right there. We look here, maybe, I don't like this, but I'm going to try it anyway, 5.6. Oh, okay, this is better. This is what I like to see, 5.4. This little area where a lot of candles couldn't break it. Good. So what I really did when this happened was I sold on the way up. So it kind of just broke through and I just kind of just sold at before it moved to 5.5. And as you see here, it just broke through and off we go. Oh, and here, if you guys see my last video, the ascending triangle video, you guys notice that this is the exact same pattern. Breaks through these highs, consolidates, and then comes back up. But here it crashes. Or at here, it went below. And it just further fell off, right? And I remember I sold on the way up. What are some good indications that this is a good setup? Just looking at the chart, right? Looking at the chart. This is our 1 minute chart, right? That's our 1 minute chart, 5 minute chart, right? Came all the way up, came back down, sharp rejection right here, consolidated. Remember, guys, relax. People are selling, but there's also people buying, and the volume just slows down. The volume of transactions, as we see here, effectively slowed down, right? So there's consolidation. There's people who already sold, brought the price down. Now they're just chilling. People buying, chilling. Everybody's waiting to see what direction the price is going to take next. So as we see here, it came to this level of 4.42. And then right here, 4.5, which as we know is a 4.5, 50 cent is a good, any 50 cent intervals are good support and resistance intervals. But what's interesting here is that we see it touch twice, a little double tap. And the more times that something taps, the stronger that level becomes. And just like that, the stronger level becomes. When it's broken, the stronger the movement will be. So if it taps here 2, 3, 4 times and then crashes, it's gonna sell off. So what I'm looking at, wow, it tapped, I'm looking at like, okay, it tapped 2 times on the support area. Now it's about to climb up the volume weight average price. I never buy below the volume weight average price. That's my rule. And now that we're in the buyer territory, the volume weight average price territory, I'm looking to buy. And then essentially, I bought in my first position. Simple, right? If you see here on the 5 minute chart, you see these little 2 candlesticks, right? Let me see if I could enlarge that for you guys. let me hide this white line so you guys can see it better. So as we see here, these two lines right here are essentially, these two candlesticks are essentially this area right here. We got two taps. And when I see this on this 5 minute, I'm like, okay, what does this mean? Look at the difference between these two red candlesticks, right? This candlestick had a sharp, strong rejection, meaning that it opened, the candlestick, the 5 minute candlestick opened here, came all the way up here, crashed all the way down, and closed here. And then the next 5 minute candlestick opened here to continue. Okay, this 5 minute candlestick opened here, went all the way up to 5, came back down, closed here, but it still closed at a gain, right? And then here they came back down, but couldn't break the support level, came back up, came back down, couldn't break the support level, came back up. As we see here, came back down, couldn't break the support level, up, down, couldn't break the support level, and came up. And these lines are good because lines show quick movement. Lines show quick direction change, right? That's why we came all the way up here, but all the selling pressure just crashed it down. And the body part represents the open to the close, meaning that it opened here, closed here. However, it was able to reach this point. That's what this line means. And that's where we get this move right here, where the candlestick, as we see here, opened on this minute. Oh, now we go to here. It's like a pattern, right? Open here, this green candle open here, close here. Now it opened here, came all the way up, came back down, and closed there. So if this candlestick would have closed here, it would have been green. But since it closed below its opening, it closed red. And a candlestick can become both green and red within seconds, like it's constant. So that's a little breakdown of candlestick patterns, and that's why I believe that this support, especially at 4.5 of 50-cent intervals, are strong key levels of support and resistance. So yeah, that's how I was able to profit off that. Here's my my TD Ameritrade page. You can see here, bought 50 tops, 50, 50, 50, 200 shares bought, and then I sold these at these levels, and you can see the prices right here. And since I started my YouTube video, this has been my growth. I started here on the 22nd, and as of now, it's December 7th, time of this video, this is where I'm at. So that's good. I'm not showing the whole account for privacy reasons. Yeah, that's essentially what I've been. And then, guys, if you watch this, thanks for watching. I hope I made everything concise. I'd love some feedback, and thank you. I'll see you guys next video.